Welcome to the November 2021 Las Vegas Real Estate Report. My name is Jan O'Brien. I'm a team leader and business coach, 29 plus years in the real estate business, working with this awesome team of local area experts. Make sure you reach out to a member of our team to help you with all your Las Vegas area real estate needs. Here's what I'm going to talk about this month. As always, the Las Vegas area real estate market update. Going to give you the recent stats. I want to talk about foreclosures and headlines, key national housing forecasts, what's up with mortgage interest rates. We're still in a seller's market, but it is decelerating. So here's the housing snapshot for October for the area that services Las Vegas realtors, which is pretty much all of Clark County. I'm just going to focus on single family. We did have an increase in the median sales price. I'll show you that in our next chart, but it went to 410. That's up 20.5% from October of 2020. We're still down a little bit with the number of solds. The solds are strong, and they're just off about 4% from the previous year, which is a crazy busy year. Listings coming on the market, 3564. What we're finding here is prices are still high, and I'm finding that sellers are having to, in some cases, adjust their prices because the market is slowing down. It's decelerating. The prices are not going to continue to skyrocket like they have in the beginning of the year. And then available inventory, 3287 units, single family only. The condos are down here, which is a little over 1 month's supply. So that had dropped below 1 month's supply. This is also an indicator things are staying on the market just a little bit longer. This chart right here really shows what happened if we just track the Vegas's median sales price for single family homes since the beginning of the year at 343.9, and you can see where the market sort of peaked. I thought it was going to peak right in here, but you can see it did peak and level off a little bit, but we had a slight uptick here for October. So we were having these big gains, got up around 405 for 3 months in a row. Actually, the median sales price was 405. It's 410 for this month. We'll see how it ends for the upcoming 2 final months of the year. Now, let's take a look at a couple other key Las Vegas stats for the month of October. These are closings for the month of October. Pretty much close to what it was, slightly up a little bit by about a half a point. 29.6% of all sales were cash. This is where a lot of frustration is coming in for buyers, great for sellers, but for buyers, you're competing with almost 30% of the sales were cash. Well, the good news, buyers, is 70% were not cash, okay? And then regarding short sales and foreclosures, they, again, dipped below. They were only 0.3% of all sales, which you can see compares to about 0.9 from a year ago, 2.4 from 2, and so on. Now, this is the reason why this is important to talk about here for a second, is I really want to talk about how sometimes headlines do more to terrify than clarify. And it's really important to dig into the details when you're looking at some of these headlines that are meant to be a little bit about making you click on something and getting your attention. This actually was something that came out from Realtor.com saying foreclosure starts are up 49%. Is this a repeat of the early housing crisis? And yes, they did go up. But when you're comparing that to last year, we were in a pandemic and there was a mortgage foreclosure moratorium. So of course they're going to be ticking up. Now, I want to talk about the facts here for a second. And this is the Realty Track definitely looks at all the foreclosure and the distressed property activity. So take a look at this quote. As expected, foreclosure activity increased as the government's foreclosure moratorium expired in January, but this doesn't mean we should expect to see a flood of distressed properties coming onto the market. Couldn't agree more. That being said, we will see some properties come onto the market, but it's not going to be this huge flood like we did have in 2008. Now, Nevada is one of the highest, right after, I believe, the state of Illinois, in having how many, in just in August, foreclosure filings. 1 in every 4,738 units, there was a foreclosure filing, which basically means the start of the foreclosure process, a notice of default. Someone hasn't made their payments for 3 or 4 months. Now, that's compared to 1 in every 8,677 units in the US. Let's just give you a little perspective. So, Nevada, of course, hit one of the hardest hit places because of the tourism, the shutdown that really impacted people and jobs and so forth. But why we're not going to see this huge flood is a couple reasons. And the first reason, we're not going to see it until maybe next year because it takes a while to process the foreclosure, go through the whole foreclosure process. There is a series of things that have to happen. The banks are going to get inundated here, and they're going to take time to try to work out, the loan with the home buyer if they haven't already tried to do that, loss mitigation and loan workouts, modifications. And honestly, I've been saying this for, if you've been watching the videos here, I continue to say that homeowners have equity. So even if they have been behind in payments and they haven't been able to work it out, in many cases, they can ultimately decide to just sell the house. They're not going to have as much equity as they would have had. But since we've gone up like 20% year over year, then there is equity. Unless somebody took that equity out, unless somebody bought something relatively new, those are where we're going to see foreclosures upticking in the beginning of the year. Okay, so watch the headlines, dig deeper, and always consult with one of our local area experts, and they can help you understand what's really going on in the market. So I wanted to talk about, is the market adjusting? And this is nationally. It is very reflective of what's happening in Southern Nevada. This is showing times. This is something that we use as real estate agents across the country, and they collect stats for us, and it just gives a sense of what's happening with buyers looking at properties. And here it is for since 2020, January 2020, and you can just watch the index, and there was a concern that, wow, we're really leveling off and it's really slowing down. Again, the numbers show that the prices were up higher in the beginning of the year and through the summer, and then they're leveling off. But let's put it into comparison with September's. Okay, August, September, generally there is a bit of a slowdown. And so if we go back to 2017 and just use this index, you can see that 2020 was just a crazy fall because of the buyer demand, not as much inventory on the market. So showings were up. And now here in 2021, people are comparing it to last year. Well, last year was an anomaly with how much prices went up. It continued into this year. But if we now compare to the 3 previous years, you can get a sense that no, there's still a lot of activity that's going on out there. And here's one other chart that really helps understand the showing time index. In fall months, the showing time index has been shown to be a leading indicator of what we can expect in the upcoming spring market. So in 2020, the fall was incredibly competitive for buyers, just as this shows. In previous times, there weren't as many showings compared to last year and this year. This is putting into perspective, right? While this year we're seeing slightly lower numbers, again, compared to the previous year, the hints at a gradual easing of the inventory shortage coming into the next year are there, right? A notable exception is in the South, but out here in the West, you can see that we have had a bit of a slowdown, again, comparing it to the previous years. So what are the experts saying about home price appreciation and sales going into 2022? Well, here's the major folks that track this from Fannie and Freddie. This is the Mortgage Bankers Association, Wall Street folks, National Association of Realtors. And you can see if we just take a blended average, it's right around 5.1%. Now, why is that significant? Because that's getting back to normal. Somewhere between 3 and 5% appreciation per year is what we have in a healthy, normal market, not 20, 25%. We cannot sustain that kind of crazy appreciation. It's been great for sellers, but we're going to have to do this deceleration, slowing down, slight correction, and then getting back on track with this. Still, price is still going up. Nobody's projecting major fall of prices, like again you see in some headlines. And this is the home sales forecast, again projected to increase well into 2022. So the number of homes sold, all the 4 main projecting in 2021, somewhere around 6.5 million sold. And you can see the projections look good going into 2022. Now, as far as mortgage rates, yes, definitely with signs of inflation. Inflation is always tied to the mortgage rates going up. And you can see where they're going. Well, they're already over 3, which, by the way, amazing if we continue to have interest rates that are under 4%, which is what everyone is projecting all the way currently through 2022. So this fluctuates based on your credit score and some other factors. So we're right around 3.2, 3.5, and that's where I think you're going to see it going into the New Year's. But it is historically extremely low, allows you to buy more house. So we are still in a seller's market, but it's definitely decelerating. It's slowing down. So good news for both sellers and buyers. We continue to be in a seller's market, and a seller's market is when there is less than 6 months of inventory. When we start getting into 6 to 7 months inventory, we're more in a neutral market, and then over 7 months inventory, which we really haven't had, as you can see, since this 2006 into 2010 time. We've been in a seller's market, with the exception of this downturn where we had all the foreclosures. It's been a seller's market, and we've been in a seller's market here since about 2011. Okay. Now, continues to be pent up demand. The interest rates are still extremely low. They may not be under 3%, but they're definitely in the low threes. New construction is continuing to take off despite labor shortages and supplies and so on. The end of forbearance, I do believe we're going to see more properties come on the market, maybe some distressed. Of course, we will see some distressed uptick. Maybe it gets up to 2, 3, 4, 5% of the market, but I don't see that happening until next year, just because of the reasons I went over today. And so I do believe some people will just decide to put their homes on the market. Investors are putting their homes on the market. You're going to see more people feeling comfortable putting their homes on the market. And if you're listening, this could be you, because nobody really knows when you're at the top of the market until we're past the top of the market. When the market is by us, we'll be able to say a few months, it'll be like that was the height of the market. We're definitely in the middle of that somewhere right now, with things adjusting, but not a lot of price. I don't believe the sky's falling. There's going to be an adjustment, a slowing down, and then getting back to a normal appreciation. So reach out to anybody on our team if you're considering thinking of selling your home and you want to know what we do to competitively market your property. We are excited to share with you our marketing plan. You can certainly connect with us on social media. Make sure to subscribe and check us out on YouTube. Our team is producing videos on a weekly basis. Please reach out to one of our local area experts, whoever maybe sent this video to you, or if you're watching it here on YouTube. We have a great team that's ready to help you in all of the Las Vegas area, including Pahrump, Boulder City, Henderson, North Las Vegas. Until next month, that's your October Las Vegas area market report. Thank you.